Hey folks, welcome back to Finance Fridays. I'm your host, Lucas Ballahood with Coldwell Banker R.M.R and the Ballahood Group. I'm joined again today by my good friend Alex Job with RBC. Alex, how are you today?
I'm fantastic. How are you, Luke?
I'm doing very well, thank you. So I wanted to stay on the topic of this adjusting market that we're in right now, prices have been shifting a little bit, and it brings us to the topic of home appraisals and some
hmm
risks that come into play for people on the home appraisal side of things. And the reason I bring that up is, if I bought a property or if a client bought a property today for, let's say, $800,000 and it didn't close for a couple of months and the market shifted.
Yeah.
And it shifted so much that when the appraisal happened, that it was the bank suddenly thought it was worth $750,000. So that's a
hmm
$50,000 difference. Now, what happens in that situation when the
Okay.
home has been appraised less than what the purchase price was?
hmm
And B, what other options or what should people do, to try and mitigate that problem?
Yeah. So in that case, the first piece of your question was, what do they do in that? What happens in that case, or what's going to?
Yeah, so they've purchased the property at 800,
Yeah,
and when closing happens,
it comes in lower.
the bank has appraised it less
Okay.
than
So
what
if that
they purchased for.
if that did happen, then the lender is going to lend based on the lower of the purchase price or the appraised value. So in that case, if the client was looking for 95% financing, they're going to have to do 5% down on the $750,000 value, okay, plus that difference of the purchase price. So they're not going to do 95% of the purchase price at 800 if the value is only 750, right? So that would leave the client with a $50,000 shortfall. And I mean, we do not want to see these things happen to clients, but it is a risk if you're doing the appraisal prior to closing and there's, like you're saying, a market shift, right, in values. So it's very important when you're doing a purchase, and whether you have a financing condition or not, maybe you are going firm, you want to have the appraisal done as soon as possible, like right away. And so with RBC, when we issue a firm approval, which means all of our underwriting is completed, we are not doing an appraisal prior to closing. It's already been done and dealt with. So very important. And like you said, if there is a shift in the market where we run into some values and purchase prices having a difference,
Mhm.
then yeah, just deal with it right from the get-go.
So that's huge with RBC having that option, right?
Yeah.
Right now, because the market is shifting, and if you've been approved at a certain point, and the market shifts, and the values on the street now are a little lower, that you've got that appraisal out of the way up front, and you're going to guarantee that mortgage at closing, and not going to flip. You're not going to drop a $50,000 bill
Yeah.
in order, or at least the
And
lawyer,
when there was
to close
times
it.
of when there were times of financing conditions, sometimes clients wanted that done right then and there. Like, so sorry, it is done right then and there, but this reason why they wanted a financing condition to make sure that the appraisal came in, and that because sometimes they do have minimum down payments and that's all they have available to them. So that's peace of mind. It's done up front prior to waiving your financing condition or ahead of time, so you've got good notice as to how to get things together for closing. Yeah, you know up front.
Oh, wonderful. No, that's a amazing thing to have or to have available to us there with RBC, and I certainly think it's an important one. And the other thing I was thinking about here was because it's kind of this I don't want to call it a myth. It is true. This can be a problem is, if someone were to purchase a property and then before the transaction closed, if they were to go out and make a big purchase, let's say buy a car and
Mhm.
change the total debt service ratio, that
Mhm.
can actually impact how much the bank might a bank or a lender might loan them for their home purchase, right?
Yes, then you don't want a deal to fall apart in that case either. So typical lenders will do, another credit check prior to closing. And if that's the case and something has changed there and you're no longer qualified, they could, just say that the mortgage isn't going to happen anymore, and you don't want that to take place. With RBC, when we issue our firm approval, which means we've done, again, all of our underwriting, it's guaranteed to close, and it's approved in writing, and it's ready to go to a lawyer's office after we sign some paperwork. So we are not going to be doing that second credit check. As long as there's no other changes to the file, it's good to go and ready to close, and huge peace of mind for our clients.
Oh, that's wonderful. I wouldn't say to anybody now that I've got a firm, I bought with RBC and I've got a firm approval on my mortgage before that closes that I should go out and buy a car. Of course, I should still be
Right.
responsible in that, make sure. But you're not going to go back and the deal's not going to fall apart as
Right.
a result of me having to go out. Let's say I had to, buy a new car because mine broke. Really, yeah, it's, life does happen, and you're not going to get burned when that situation occurs, right? So that's wonderful extra added value when you're working with RBC, which is why we work together. This is wonderful. Well, that's great, Alex. I really appreciate that advice, and I think folks really need to listen to that one right now with the market
Mhm.
shifting in the way that it is. But something that we're gonna have to keep monitoring as well, and I'm sure we'll talk about again. So, I think that's all the time we'll have for this segment today, folks. Alex, appreciate your time as always, and
Thank you for having
look
me.
forward to having you on again here soon.
Thanks. Have
All
a
right,
great day.
have a great weekend, everybody. We'll talk to you again. Bye for now.